For the first 4 months of the year, the housing supply in South Florida moved independently. One county would tighten while another held its ground, creating a disjointed contraction. That changed in May. The regional market synchronized, and for the first time this cycle, inventory shrank in every county and every property type at exactly the same time. Sellers pulled back across the board, even as buyers continued to absorb what remained. This simultaneous withdrawal removed the regional buffer. With supply tightening everywhere at once, prices responded immediately to the lack of inventory. The Tri-County snapshot reveals the depth of that shift. Across the entire region, active listings are down significantly from last year. The single-family sector saw the most aggressive pullback. In Miami-Dade, new listings plunged 36%. Palm Beach managed to hold on to more of its incoming supply, but it still followed the broader downward trend of its southern neighbors. South Florida is now acting as a single tightening funnel. By moving in unison, these markets have concentrated leverage away from the buyer. The immediate effect of that restricted supply is a broad upward turn in single-family prices. Palm Beach is the clearest indicator of this tightness. This chart shows active inventory sloping steeply downward, leaving just 4.1 months of supply. As inventory fell, the median price recovered to $675,000, supported by increased closings. That recovery brings the Palm Beach median 5.5% above where it sat last year. This rapid price response proves that buyer demand is strong enough to immediately capitalize on any reduction in available homes. The condo market is following a different trajectory, moving at 3 distinctly different speeds depending on the county. Palm Beach is currently the furthest along in its recovery. The median sale price reached a high for the year in May at $345,000, a 4.5% year-over-year increase. In Broward, we're seeing active absorption. Buyers are clearing out new supply faster than sellers can add it, a trend that is finally starting to push the median price point higher. The data for Miami-Dade condos shows the most significant lag. The median price slipped to $416,000 as the demand pipeline narrowed. While the region as a whole is tightening, geography still dictates power. Miami-Dade condos remain the primary sector where cash buyers still possess negotiating room. For the individual seller, success in this environment is determined by the initial asking price. This chart quantifies the mispricing penalty. Sellers who priced correctly closed within 3 to 5% of their asking price. Those who reached too high surrendered up to 13% of their value before the deal closed. The market rewards precision. This supply shock creates an advantage for sellers, but only for those who avoid overplaying their hand on day one. 3 variables will define the market in June. First, whether sellers return to the market. Second, whether single-family demand remains resilient against this shrunken supply. And finally, we will see if condo demand holds up despite the recent softening in pending sales. You can find the complete county-by-county breakdown in the South Florida Market Insider on LinkedIn. To find out exactly where your property stands in this data, reach out to Matthew Krinzman at One Sotheby's International Realty.